What food group is going to be impacted the most? Is it me going to the grocery store or is it me going to a restaurant?
Well, there's always the impact versus perception, so all the stocks might not trade the right way. But that being said, for you and I as consumers, it's really going to be at the grocery store, and it's really going to be with eggs, not chicken.
Why is that? Why aren't the chickens and chicken breasts and chicken thighs being affected the way that eggs are?
Well, right now it looks like the flu has been in the egg-laying hens, and like you had said, it's 2x, if not more, the last outbreak we could really measure here in the 1983-84 period, and it's really not at all within the broiler hens. And the broilers, or the broiler chickens, that's what goes through the food supply chain.
How long does something like this last? You know, going back to that outbreak in the 80s, prices increased almost 150% for those liquid eggs that are used as input for consumer products, and it took a long time for those prices to regulate.
It really did. It took as much as 24 months to get to some kind of equilibrium. Of course, the initial spike didn't last that entire period, but it did take quite a while to get back to a steady state.
So, Nicole, let's talk about what companies are affected directly here. What would you say stands to lose out?
Well, from a restaurant company perspective, it would be anybody that over-indexes to eggs, which could be those that over-index to the breakfast day part. It could be a McDonald's, it could be a Sonic, but even that is very immaterial when you consider if it were to get into the chicken population, which again we don't, which is a protein that's much more substantial for the restaurant operators.
You know, in your recent note, Nicole, you sort of made the distinction between companies that are franchisees operated and those that are not. Why is this relevant when you're dealing with a potential supply crunch?
It's really critical to point out that for investors, if you are concerned about this, to stick with the highly franchised models, albeit it could definitely impact their franchisees in the short term, it would have literally zero impact potentially on a consolidated P&L, as some of these brands, like a QSR, like a Dunkin', are 99% franchised operators.
Do you see any of this priced into these companies' shares, Nicole?
Actually, you know, we have seen some volatility. I look at it as a Fiesta, for example. In looking back over the past quarter or so, there were concerns with oil in Texas, and they over-indexed there. There's concerns, again, very topical concerns by investors about chicken, because, again, this is not in the broiler population. But that's a stock that I continually see selling off.
And in your recent note, you also mentioned Chipotle being potentially at risk. They're planning to open 205 new stores this year. Does something like this have a significant impact on their potential to grow?
Well, we did point out that if it were to happen, and we think the probability is very, very unlikely, it is a company-owned model, number one, and it is above the 15% threshold in terms of chicken as in terms of the cost of goods sold basket. That being said, this is something that would be short-term in nature and would have no impact on their balance sheet, which would, you know, have no impact, therefore, on their new unit development.